Welcome back to the Beat the Odds of Business and Wealth podcast, Trevor. We have a very important episode here today.
Yeah. People thought that, we got some good news. Finally, someone with some openness and transparency in the government talking about our money. But what did we find out?
I think, we've seen these viral clips going around of the parliamentary budget officer sounding the alarm. We're on an unsustainable path, looking out over the fiscal cliff, right? I'm not convinced what people saw was what they think they saw. I think people think, that there's finally someone sounding the alarm on our side, fiscal sustainability. It's like, I'm not as convinced. And I'm going to show you why. Okay, so we're going to go, because we took some time here. We're a little later going on today because, like I said, Trevor was like, that looked weird. That looked weird, right? And we've seen the clips, but we went deeper here, right?
Yeah, especially when you think of like the last 10 years of Trudeau that we had, nobody ever said anything bad about Trudeau whatsoever, or anything bad about the government, or anybody who tried, revealing what was going on behind the curtain never occurred. But all of a sudden we have this guy coming out and, raising the alarm bell saying, oh, this is completely unsustainable. Yeah. You guys will see the clips here in just a minute, but let's check it out.
Here's a clip. So here's clip number one I'm going to give you here. So
I'll hazard a response. It should be very alarming, right? These are, I don't know, I think I use the words in French, and which the translators probably got really well, like stupefying, shocking, right? This is not, like, it's not a funny fiscal outlook. It's a really serious fiscal outlook. And we don't lightly use the word unsustainable, right? Unsustainable means you don't have the option of saying, maybe I'll wait a couple of years, I'll see how things go. It means if you don't change, this is done, right? So it's very serious. And I think, as anyone who's managed a household budget knows, if you sit down at the end of the month and you don't have enough money to pay your bills, and it happens month after month after month, you know that something's going to break.
So, shocking, stupefying, very serious, right? He's kind of disheveled looking, like he just came from, he's been working for 100 hours straight. He's got the glasses on, right? I just want to, I think context is important here, right? So, but we go on. There's more clips in it too, because they try to, dissuade it as if, the argument is always, well, it's only relative to the other G7 countries, right?
Right, yeah.
It's only relative to the other G7 countries, and we're doing okay compared to the other G7 countries. And his answer was somewhat comical to that, but let's see that here. So
we pivot back to fiscal matters. So looking at our current position, we can't look at it in a vacuum. It has to be viewed, I would say, on a comparative basis. So Canada still maintains its AAA credit rating, and its current debt to GDP ratio is, I think, 2.2%. How does that compare to some of our G7 colleagues?
No. To Canada relative to other countries is in a more favorable, if you look at the numbers, in a more favorable situation immediately. I would say, like, for myself, the analogy is, I don't know, you're 200 pounds overweight and you have 50% body fat, and everybody else in your group, in your weight loss group, has 75% body fat and is like 400 pounds overweight and can't get out of bed. So, yeah, like, we're in a more advantageous position. And
that was funny. I mean, in preparation for this, Trevor, it's like I'm gonna watch this entire thing because, like, I've seen all the clips. Everyone's seen all the clips. I'm watching this entire thing. I want to see. I don't like whenever you see like a little tiny clip go, viral and get shared around everywhere. It's like, show me the whole thing. Like, show me the whole thing. And
I want to see the context of what they're talking about.
Yeah.
Where that clip came from.
Yeah, and we're going to go even deeper than this clip, right? But, like, I'm just setting the stage. It's like we're setting the stage. It's like, you ever watch, some of you might have watched, maybe you watched, like, comic book movies or something growing up, or, maybe you watched professional wrestling or something. Like,
yeah.
What do you need in this story? It's like, you need a villain.
You got to have a villain.
You got to pump up the villain, okay? Right? So, Mr. Jason Jacques there, he's given his opinion. Let's call it. He's given his opinion. Look at the disheveled. Look at the facial reaction.
Look at his
there.
tie.
Yeah, like it's all crooked and everything, and like, okay, interesting. That's what we got here. And maybe the one other thing here is like, is that all? And this one probably didn't get enough attention. This was the part that didn't get enough attention. There was a very good question asked, is like, is that it? Did you consider everything, right? Let's watch this one here. So,
in your opening statements, you spoke to the fact that this outlook does not include incremental measures to achieve the North Atlantic Treaty Organization, or in other words, our commitments to NATO. And I'm wondering if you would be able to comment on what other spending that may have been included in the Liberal platform is not included in your numbers.
Thank you for your question. The last time that I've looked, there's about 20 billion or so in spending that has not yet been included in our outlook from the Liberal platforms, if it does come to pass. So we will see on November 4th what they will announce and what they don't announce, but roughly that is what's not included in our outlook right now.
Good. Okay. So that was like to me, that was a big moment here. We're talking about a $60 billion deficit that's expanding here. And not the head person, but the associate or the assistant goes on. It's like, by the way, there's another 20 billion that's been announced, but wasn't really considered in our report. And this goes around for like, this is an hour and a half. This thing, nobody presses her to ask like 20 billion a year or over the course of this thing, or like nobody bothers to follow up on that, which I thought was one of the most specific, significant statements in the entire thing. Right?
Yeah, it just floats this extra 20
billion. I mean, that's been the number though. We've been floating an extra 20 billion around just for a while, right? Last time it was the contingent indigenous liabilities that just got put in there at the 11th hour for an extra 20 billion, right? And that's what got us to 60 last time around, right? From 40. So, interesting, right? Interesting that there could be another 20 billion, right? What's 20 billion between friends, right? It's only, it would only be a 33% increase in the whole thing that they're talking about here, right?
Minor details or no details.
Okay. So like, I know people saw this and I think it was probably like, finally someone inside the government is sounding the alarm on this. It's like, okay, let's dig a little deeper here. Let's just dig a little deeper on what you might have actually saw here. And maybe I'm the conspiracy theorist, but I think the scariest words in the English language is, I'm from the government and I'm here to help. So
yeah, well, we've been sounding the alarm for a long time on the fiscal mismanagement, our debt to GDP ratio, even though we're not as bad as our 400-pound overweight cousin to the south. We're still not in good shape here, folks. Just because it's we're pre-diabetic and not like full-on diabetic, morbidly obese, need to be cut out of the house. Yeah, it's still not good.
Yeah. So I mean, okay. Who is Jason Jacques? Who is Jason Jacques? He's the interim parliamentary budget officer. Interim. He's the interim. Where else did he work? So he's a CPA, CFA. Okay. He worked for the Privy Council Office. He worked for Finance Canada. He worked for the Treasury Board. And he worked for the Bank of Canada. Interesting. Where has he not worked, Trevor? In that list of resume there, where are the places that he's never worked?
He's never worked in private industry.
Interesting.
There you go.
He also worked at the Bank of Canada. Canada. Who else worked at the Bank of Canada?
Ooh, name escapes me. Mark's Carnage worked for the Bank of Canada. He was the head guy at the Bank of Canada and the Bank of England.
Okay.
All right.
Okay. Now,
I'm sure he has no influence whatsoever on Jean Jacques.
that was Jason Jacques version 1.0. The glasses, the disheveled, the quintessential, nerd number cruncher sounding the alarm for the good of the Canadian public, right?
Thank you, Jason.
Fast forward a few days later, and all of a sudden, Peter Parker disappears, and a new Jason Jacques emerges. Interesting. Here's another clip of Jason Jacques, all CTV News, ready to roll.
Structured. During periods of downturn in the overall economy, deficits increase because spending increases. We have a social safety net. It's in place so that when people across the country face hard times, collectively, as Canadians, we've agreed that the federal government is going to step in and help people out, both in the short term to make sure that they're not going to lose their homes, but also over the longer term to make sure that they can receive retraining so they can move into their next job. And then at the same time, while they're doing that, it would be pretty unfair to ask them to pay taxes on money that they're not earning. So of course, revenues go down at the same time. But hopefully, what we've seen over the past 75 years, once we get out of the recession and once we get out of this sticky economic situation, things start to turn to the positive side. So the deficits should start to shrink.
Wait.
Same guy. I know, same guy. This is Jason Jacques, version 1.0 here. Fast forward a week later, goes into the phone booth, comes out as this guy. And, we're talking about the social safety net and how investing in Canadians is going to reduce the deficit over time.
Hang on a cotton picking second, because I remember I watched that video just like you did. And they said, so you're saying that we're not in a recession and, your projections going forward is that we won't be in a recession. And what did he just say 2 seconds ago? We'll come out of the recession period, ... They're lying to us, man.
Look at that nice suit, though.
I know,
look at the
right?
suit. Look at the first suit. Look at the first suit he's got here. I don't even know if that thing fits. Look at the arms.
work
It's
suit, yeah.
Dude's on point here in this video. He's on point. He's got the makeup. He's got the
He's wearing the
got
Armani.
tie. There's no more glasses. The glasses are gone.
Yeah.
Did you notice the glasses are gone?
Got a haircut. Looks
Totally. He is ready for prime time now, right?
Yeah.
Interesting. That does not sound like the guy Fiscal cliff unsustainable. It's we got the social safety net and we can.
Well, in just that short clip you shared there, it's talking about people losing their jobs, having to get retraining, moving across the country, having social supports, not having to pay taxes. Holy crap, that's a mouthful that he said in one little brief episode here on the CTV. What the crap are they planning? This is awful.
Let's go to the report.
All
Let's
right.
go to the actual report that
do
they
it.
issued. Okay. Go to the actual report that they issued. Okay. And here should be the first problem with the report. Okay. First problem here. The Bank of Canada policy rate at 2.5% as it is today, they have it going up next year from 2.5 to 2.75. So in other words, all of the five major banks, all of their economists are wrong. All of the bond traders are wrong. And interest rates are, in fact, going up. Okay. Mm-hmm. Now, I can recognize that as a possibility. That's a possibility. It's not the likely possibility. It's not the likely possibility. But in conjunction with something else, it's the unemployment rate. Look at the unemployment rate. It goes from 7.2 to 6.4. Now, I don't think that the policy rate going up is the likely scenario. Policy rate going down is the likely scenario. Okay, that's pretty much all what's what the bond traders are recognizing, who have no political obligation. They're just in it for their self-interest, and that's what the five big banks, they're all projecting the same thing too. But tell me, in what world does monetary policy get tighter, interest rates go up, and unemployment comes down? It's like, where is that going to happen? So even if you do think that the Bank of Canada policy rate is going to go up, how does that alleviate the unemployment issue coming down in a short period, sharply too, by 0.8%?
That's a lot.
That's a lot.
I mean, because like we've been watching and monitoring the unemployment rate for the last 12 months, and it's been dramatically increasing every single month. But all of a sudden, we're going to have that
tighter monetary policy,
right?
and unemployment's going to get and employment's going to strengthen.
Maybe they meant it to be 7.4, not 6.4. Maybe it's a typo.
I know. I was like, well, the question was like, maybe you should not. It is a government employee. Maybe they just copied and pasted last time's report in there, just pasted it over, and nobody checked it. Like,
yeah.
I suppose that is possible, but like, okay, what's the what is the conspiracy here? It's like, what could you be seeing here? It's like, could you be seeing a government employee who's sounding the alarm? A disheveled, nerdy government employee sounding the alarm? Or is it somewhat suspicious that that disheveled, nerdy employee comes out on CTV a week later, a few days later, much more polished, much more, much less let's cut and be fiscally responsible, much more let's provide a social safety net, okay? And then you take it with these numbers that don't make a lot of sense. It's like, what are you laying the groundwork towards? It's like, what did you just see? It's like, you just saw the creation of an insurmountable villain. Okay. Now, what is Mark Carney's stated plan? It's to invest in Canada and grow their way out, right? Okay. I'm going to tell you another possible outcome is, they will grow their way out, but it's not because of the investments will grow their way out. It's because of the expansion of the monetary base. Okay. It's because this policy will, in fact, be looser than what they're saying here. That policy will be looser. And because that monetary policy is looser, the monetary base will increase and the nominal GDP will increase, not real GDP. And I even just hate the term real GDP because it's calculated based on the government's inflation, right? But nominal GDP will go up and they will surprise to the upside in terms of revenue. They will surprise to the upside. And they will say, and they have painted the picture now because they surprised to the upsides because of the investments that the Liberal government made in Canada that they're going to surprise to the upside.
Yes.
But in reality, it's because looser monetary policy is coming, and that's going to be the reason that they're going to surprise to the upside. So yes, they will raise more tax revenue, but those wages and those profits are just inflated profits based on looser monetary policy and increase in the monetary base. And can I tell you this for sure? No, I can't tell you for sure. I'm just saying that's, what's more likely here, people? What is more likely? That you finally had a government, parliamentary budget officer sounding the alarm, who's been a good foot soldier for a long time here? Or have they painted the picture of, it's like, I feel like this is just like a back catcher, and they just threw a fat one to Mark Carney from a PR point of view, not from an actual economic point of view, but just from a PR point of view. It's like, this is the big, scary situation that we're facing here. And I think some people, they're just like, they think that people with an alternative view to them are stupid. That's just like the natural. It's like, sometimes people are devious and smart at the same time.
Yes. Yeah.
And sometimes in order to have a victory, you have to create a villain. Okay. The villain is this difficult fiscal situation, right?
Yes. And Mark Carney's going to come out smelling like a rose into another election cycle where he will again, we will elect, hopefully, that they're hoping this time we'll get a majority Liberal government. But really, folks, the picture that you're painting, the picture that you're seeing here is things are not getting better. It's all smoke and mirrors. It's a fugazi. It's not real GDP. It's not true growth.
Yeah.
It's It's fake. It's Fugazi. I think you got some more to show.
It's nominal. And, we've been trying to paint people, through this here. It's like, this was the point where, like, I started sounding the alarm. Like, in 2022, I started sounding the alarm. And the people who've attended our boot camps know, it's like, I didn't own any gold or Bitcoin prior to 2022. It's like, Bitcoin was a risky proposition, okay? Gold was an underperforming asset, okay? In terms of, like, what else I could invest in, okay? And the debt to GDP exploded during COVID because the economy was shut down. Okay, I understand. I understand. I don't agree that they shut it down, but I understand, okay? But what should have happened is it should have normalized. And governments around the world all chose to not normalize it, right? And this was the picture we were sold, was this, that it was going to come down over time. This was the original projections. And now they're saying, it's like, here's what it is, right? And it's like, right here, it's like we had a structural difference on what our debt levels and what our deficit levels were around the world. And people needed a hedge. And no one was recognizing this. It's like, this wasn't, I wasn't the guy in the, in the early 2000s, in my basement with my guns and gold, thinking it's all going to zero. It's like, we adopted this path, and we adopted, these recommendations based on real numbers. Like, it didn't normalize. It's like I keep telling people, it's like someone yelled iceberg straight ahead, and they just accelerated straight into it. And that's where we are. This chart just shows it, what it is, right? And now the parliamentary budget officer is saying that we have this insurmountable situation. And I think they're just creating a scenario where, from a PR point of view, they're going to be able to say that Mark Carney's policies are responsible for normalizing this situation. There's even a bit of a footnote here, right? It's like, key upside risk, stronger domestic demand. They're going to call it stronger domestic demand. But if interest rates are reduced further, if they're reduced further, everyone says they're going to be, or population growth is higher than what? Zero? They're projecting zero. Does anyone actually believe it's going to be zero? Then projected household consumption and residential investment, housing prices, could be stronger than expected, resulting in lower than projected budgetary deficits and federal debt. Okay, so I mean, they've said it here. It's like, if monetary policy is looser, you could surprise to the upside, right? But that's not going to be the reason why. If there's a surprise to the upside, it's because of the glorious investments we made in, social safety nets and pet projects, right? That's going to be the reason. Couldn't possibly be the fact that we're just going to print a whole bunch of fake money and make the numbers look better.
Since when does social programs, aka welfare under a different name, lift up a country out of debt, poverty, recession, and despair? Answer me that question. This is crazy.
Yeah.
But what's the answer? Like, for the people who are awake to the scenario that's going on, what are we to do?
You should be aware. We walked through this in another episode where we actually talked about, like, actual debt levels, and we normalize it because they're actually monitored and reported differently around the world. And if you actually want to compare them, you can't just take the government numbers. You have to figure out how they're actually calculating it, okay? So, we've done this example for the U.S. versus Canada before. These numbers are maybe done a quarter ago, so they might be slightly different now, right? But you have this, like, net federal debt. You've ever heard that net federal debt? It means that they're basically working under the assumption that they're going to confiscate the CPP. So, like, that, when you drill through it, like, I won't waste anyone's time. And it's like, if we used the entire CPP fund and drained it to pay off our debt, that's what it could be theoretically, right? And then you start to get how different governments around the world will have different debt levels between the federal government versus provinces and states versus municipalities, right? And ultimately, the U.S. federal government has a higher level of debt federally, but their states and municipalities, particularly their states, have a lower levels of debt on a per capita basis when you're looking at it, right? But, is the U.S. government going to let California go bankrupt? Is the Canadian government going to, is the Canadian government going to let Newfoundland go bankrupt? Like, that's not going to happen, people. Like, it's not going to happen. I think constitutionally people will argue that it theoretically could happen in the U.S. and it's far less likely legally to happen in Canada. But I think in reality, it wouldn't happen in either jurisdiction. So I think it's very important to understand debt at both a federal, versus a provincial and state and a municipal. You need to aggregate that and understand what you're talking about, right? So when they try to sell you that the U.S. debt to GDP is 123% and Canada's 40%, it's like you're not getting the whole picture here, right? When you add it all together, the U.S. government debt to GDP is about 136%, and we're at about 120%. Okay, so I think Mr. Jacques alluded to the fact that, we're 250 pounds overweight and everyone else is 450 pounds overweight. I would suggest that everyone else is 450 pounds overweight and we're 425 pounds overweight. So not that much different, right? But that is an interesting turning point to understand where you actually do hit that level. Like, so when you're making strategic decisions, it's like, we guide people on buying actual assets that, you get on the right side of this inflationary pressure, which is inevitable. But where does that shift? It's like you have to understand that what's the release valve. People will think the release valve is interest rates. It's like, because theoretically, like the central banks set the overnight rates and the market sets the long-term rates, which is somewhat true in the interim, but eventually if, they drop short-term rates enough, and the fact that, what can the central banks do? Well, they can just buy the long-term debt and put it on the balance sheet. So they darn well can affect the long-term interest rates by purchasing it. And you can see that because we have other peers and, other economic peers who have worse debt to GDP, even when normalized for the calculation methods, they have worse debt to GDP, but their long-term interest rates have not exploded. And they've done it by simply monetizing the debt and putting more and more of the debt on the balance sheet. But what is the release valve? The value of the currency. The value of the currency. So you start looking at, countries with higher debt loads than Canada and the U.S. and have their interest rates exploded, like Japan and, a lot of members of the European Union. No. But what has happened to the Japanese yen versus the U.S. dollar? It's gone down. And what has happened to the euro in relation to the U.S. dollar? While that actual debt to GDP, not the politicized one's gone up. The release valve was the value of the currency, right? Which can affect your investments at home. It's like, what are those investments that we recommend? We structure is like that. You can outpace inflation with people. It's like, we have private companies and we have real estate and we have, high quality stocks and we have gold and Bitcoin and we have those 5 buckets, right? It could affect in the future which country those dividend paying stocks are from. That could be a consideration, right? That could be a consideration. And I don't think the U.S. is as easy as a answer as people like, right? It's just the one that we hear about, right? There's a lot of other countries on planet Earth.
Oh, there are.
And that tends to be the discussion. It's like, well, it's like you hear it in the healthcare discussion all the time. It's like, well, you're just a proponent of U.S. healthcare. It's like, well, there's like 200 other countries on planet Earth. Maybe we should look at some of them and see what their outcomes and policies are too, right? Just because you don't like the way things are going on at home doesn't mean you're a fan of the next door neighbor either, right? So that's where we are, people. I think what you witnessed was, I think it was just a PR opportunity. I would love to say it's like, the bureaucrats in Ottawa are now rallying against the government for fiscal responsibility, but I really just think I really think the opportunity to outperform that projection is on a nominal basis with the increased monetary supply that's likely to happen is is probable, right?
Yeah.
And it'll be spun in a way that will look favorable on Mark Carney. Maybe not for the viewers of this channel, but I'm just telling people, like, you have to invest in the world that is, not the world that you want it to be.
That's right. That's right. So the elbows up crowd, they're going to have something to say that,
we did it.
We knew we were right.
We did it. We just had to invest in Canada.
Yeah, we just had to, bail people out of our poor economic results.
Yeah.
Give them free money.
Really, we're just going to fire up the printing press. Pump the value of those assets that we hold, right? That's the likely scenario. And I wish I thought different. And could I be wrong? I could be wrong, but that's how my portfolio will be structured. Is based on that opinion. My portfolio will be structured on the basis that I don't think governments will be fiscally responsible. I think they will increase the monetary base to get their way out of it. That's it.
That's it.
That's how I'm going to do it.
Yeah.
And what's the main detriment to my portfolio? Is the main detriment to my portfolio is if these governments actually started balancing budgets. That would be a day of reckoning. that would have some significant losses.
Not balance that budget. What are you talking? Step away from the controls.
Yeah,
just kidding. I mean,
austerity. What's that? Don't do that.
Yeah, it all sounds good, to balance the budget. I mean, because that's what you have to do with your household budget, right?
Yeah.
Balance it. But when it comes to, if you have investments in government-protected monopolies that are always going to, grow and see the dividends grow, even as the value of the dollar goes down, you really don't want that.
Yeah, I don't need, that's the thing that people don't realize. For your investments to go up, you don't need quality of life for the average Canadian to go up.
Right.
You don't need GDP per capita to go up. You just need nominal GDP to go up and be invested in companies who make more money when the pie gets bigger. Even though everyone's slice is smaller, your investment in those companies that can make money, unfortunately, that's the way it is, right? I don't like it. So don't get me wrong. I don't like that that's the way it is, but that's just the way it is. So you should structure your investments based on the way the world is, not the way you want it to be, right?
Yeah.
And so I just think you've seen something to, pit people against each other. And I saw this go viral, and I'm just like, I saw this clip go viral, and I'm like, I'm going to watch the whole thing. I watched the whole hour and a half. I saw it last, we were talking last time. We knew we were doing this episode, but I knew I wouldn't be back in the office. I'm going to watch the whole thing, go through the report, and it's like, yeah, I don't believe the bureaucrats are rallying against are rallying for fiscal responsibility.
No,
I don't think so. I just think they're creating a villain that can be slayed with the increase of the monetary base.
That's it. Well, you heard it here, folks. We need to get you to the boot camp so that you can learn what things to invest in, what strategies we are using here as the The Odds of Business and Wealth podcast. So if you haven't got your ticket yet, go ahead and get that today. Go to spurrell.ca and click on the link and get yourself a ticket.
Yeah, over 80% sold, so we'll be sold out again pretty shortly here. So,
all right. See you guys next time.